I want to talk to you about LLC quarterly taxes and especially the mistakes you need to avoid when filing your LLC quarterly taxes. So here's an overview I want you to pay attention to. So when we talk about LLC quarterly taxes, you need to understand that taxes are different for different types of entrepreneurs, and basically planning, estimating, and paying taxes as a business owner is not like being an employee, really. And generally, employers withhold taxes from their employees' paycheck all year based on the amount the employee is expected to owe, right? So when the employee files in April, they generally pay any remaining tax liability if their withholdings were too low, or they will receive a refund if the amount withheld was too high. Pretty simple, straightforward, not a problem. But entrepreneurs, in contrast, generally have to pay estimated taxes at the end of each quarter, typically based on what they made or estimated they will make during that 3-month stretch. And it's one of those things where if you're an LLC owner, you got to really pay attention because LLC member, you got to pay attention to those quarterly tax payments, but also quarterly deadlines. Okay, and so if you miss those quarterly deadlines, the whole thing can prove really, really costly, and the penalties and interest for not paying estimated taxes on time become more severe the more the business owner owes and the longer they go without paying. So it's one of those things where it's all about liquidity management, but also about compliance management. So when we talk about LLC quarterly taxes, you got to really think about how to estimate the amount that you as a business owner may owe. Now, there are basically two approaches to calculating quarterly estimated tax payments. So the first one is if a business owner receives income evenly throughout the year, they would calculate an entire year's worth of income and deductions, figure out the taxes owed, and divide that into 4 even payments. That's the first option. Second option is if a business owner does not receive income evenly throughout the year, they would calculate what is owed each quarter based on what they have actually earned and spent so far during that year. So the possibilities are pretty endless. So it really depends upon the configuration that you want to have for your specific LLC. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. It's really important to understand the federal taxes an LLC, I would say a business owner, LLC business owner may owe, really. So a business structure actually is kind of important because it will determine what taxes must be paid, right? So for example, federal quarterly estimated taxes for a sole proprietor or a business owner operating through an LLC will generally include self-employment tax. And if the business operates as a C corporation or an LLC taxed as a C corporation, and the business owner is also employed by the C corporation or LLC, the business owner will generally not pay a self-employment tax on the salary they pull from the business in a year, but would generally pay only the employee portion of Social Security and Medicare taxes. And the thing is that the business generally pays the employer share, right? So for information on how much a business owner will likely owe in self-employment tax, it's important to really go to the IRS website to really have information because they change the rules all the time. Not change, but they update the rules all the time. So if the business has employees, if the LLC has employees, the LLC may also owe payroll taxes, which include Social Security, Medicare taxes, and federal unemployment taxes for those employees. And remember that there are some states, you got to really look at the state side of things too. So there are state taxes. And so paying federal estimated taxes is just the beginning. A business owner may need to pay quarterly estimated taxes in one or more states where the LLC operates. So these types of taxes may include a state and local income or franchise taxes, sales and use taxes, and gross receipts taxes, as well as employment taxes if the business has employees. Okay, so estimated quarterly tax calculations for any state and local income taxes owed by an LLC hinge on several factors, including based on our research, it really depends on the business, where the business operates, whether the state levies an income or franchise tax, and how the business is structured. In this case, we have an LLC. So when an LLC operates in multiple states, for example, it or its owners may owe estimated taxes in each of those states. So this is kind of important. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about LLC quarterly taxes, mistakes to avoid when filing taxes every single year. You want to really pay attention to the accounting software that you are using. Do not actually go for a crappy accounting software tool. If you are trying to really file your LLC quarterly taxes properly, you want to really pay attention to those modules that you have to get the best estimate of your LLC taxes. Consider arming yourself with helpful tools. So this includes accounting software such as QuickBooks, such as Gusto, Payroll, and those software tools allow you to track the income you bring in each quarter and get insights on expenses that are potentially deductible. There are a number of different accounting software providers, and each with different capabilities and levels of sophistication. Ask other small business owners in your industry for recommendations and make sure to take advantage of free trials to gauge your comfort with using a software application before you sign up for it, right? It's all about, it really depends also on how complicated, quote unquote, complicated your LLC quarterly taxes are, or your LLC taxes in general. Okay. So we also want to look into apps that help you to keep track of your revenue and profits and offer reports on how much you may owe in taxes for the quarter. So that way you have a clear idea what's really happening. You can also think about seeking outside help. Another mistake that you need to really avoid when it comes to LLC quarterly taxes is thinking that you know everything. You do not know everything. It's always important to really reach out to seek external help when needed, okay? And as your LLC grows and becomes more complicated, adding employees, expanding market presence, or making capital investments, for example, an LLC business owner may wish to consider hiring an accountant to handle tax preparation, especially when it comes to LLC quarterly taxes. So an accountant can ensure a business owner is paying all their taxes, timely and accurately, and also identify opportunities to optimize tax savings. So 5 questions to consider asking an accountant before hiring them. Okay, what size businesses do you usually work with? It's best to work with a pro who understands the tax issues typically faced by similarly sized LLC businesses. What sectors are you familiar with? So here, what you're trying to do here is that you want to hire an accountant who knows about particular tax rules and breaks available in the same or similar industries. Do you specialize in tax preparation? You want to find someone who has a deep knowledge of the tax code and not just experience handling the books and preparing company financial statements. Another thing is you want to ask them if they offer bookkeeping services. So the more an LLC business owner can outsource, the less he or she has to do it himself or herself. And what is your deadline for receiving my financial records? So make sure that the schedule works for everyone. Talk about LLC quarterly taxes, especially the mistakes you need to avoid. You need to really you need to file late. You need to avoid filing late. That's what I meant. You need to avoid filing late, and you need to also avoid sending the IRS a tax return or tax payments or tax returns that are full of errors. Okay, so you always want to file on time and in the right place. So once an LLC business owner is ready to pay federal quarterly estimated taxes, basically what happens here is that the LLC business owner can generally do so online or by mail. You have possibilities. The IRS has actually made things a lot easier for a lot of folks, a lot of LLC owners, especially through the EFTPS, electronic fund transfer system. And so this is kind of cool. One thing I want to say here is that many states offer an online option for paying state quarterly estimated taxes as well, especially when it comes to LLCs. So tax deadlines come every quarter, but they are subject to change. So when in doubt, it's always better to check the IRS tax calendar and the applicable State Department of Taxation's website. So if tax payments are sent on time and to the right place, penalties and or interest are less likely to accrue. So be very careful here. So what happens if you make a mistake? This is what I was telling you earlier in terms of sending the IRS forms that are full of errors. Well, while the IRS encourages taxpayers to make accurate estimates of amounts owed, the agency does provide some leeway as long as quarterly estimated taxes are sent on time. So for individual returns, there is generally no underpayment penalty if the taxpayer owes less than $1,000 when they file their annual income tax return. Additionally, if the total award was paid quarterly for the taxable year adds up to at least 90% of the total tax bill or at least 100% 110% for high income earners of the previous year's tax bill, the taxpayer is less likely to face a penalty. So this is kind of cool. And corporations with taxable income less than $1 million for each of the preceding 3 tax years generally are not subject to a penalty if their estimated tax payments are at least 100% of the lesser of the tax shown on the current or previous year. So this is kind of cool. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about LLC quarterly taxes. Let me give you a bonus here. So, there are some myths about quarterly taxes for the 1099 tax form that we need to really debunk right now. So when we talk about quarterly estimated taxes, it's important to understand that it's all about preparation, okay? And you have a bunch of constituents who should pay quarterly estimated taxes, whether they are organized as LLC, LP, or so on and so forth, or even GPs, general partnerships. So basically, the thing is that if you receive a taxable income from sources like investments, retirement accounts, large windfalls from activities like the sale of a property for a gain, alimony, income distributions from a partnership, LLC, or S corporations, you may need to make quarterly tax payments. Okay, and it's one of those things where you always want to make sure that you are constantly following opportunities to be in compliance with your LLC quarterly tax filing schedule. And it's one of those things where, as I was telling you earlier, if you can't really follow through things yourself, or if you have a somewhat complicated LLC to run, it's just better to outsource the whole thing. That way you can focus on running your LLC and somebody else can take care of your taxes for you. Because the thing is, the IRS has a steep penalties for non-filing or even late filing. They want to make sure that everybody is paying their fair share of taxes, and that makes sense. That really makes sense. One thing I need to say here is that if your LLC operates in multiple states, then you have another layer of complication to really take care of. In other words, you have to make sure that you are paying your state's quarterly taxes. And when we talk about quarterly taxes, we're speaking about not only income taxes or franchise taxes for that matter. We're also talking about the stuff like payroll taxes, but also unemployment taxes. And one thing I want to say here is that it's important to understand that it's all about preparation. Okay, it's all about making sure that you have the right software or the right third, like you can either outsource it or you can do it yourself using software. But the bottom line is you need to really think of it as something that is integral to your LLC operations. Tax filing should be integral to your operations. Very important. And I really want to debunk a few myths about LLC quarterly taxes, okay? And so basically, the first myth is you can pay your taxes in a lump sum at the end of the year. This is totally false, okay? One of the more serious misconceptions LLC taxpayers often have is that they can just pay their taxes in one lump sum at the end of the year. It's a mistake to think the IRS is okay with an end of the year payment. So if you owe more than $1,000, the IRS wants you to pay your tax throughout the year. Any missed payments will typically result in penalties and interest. So waiting until the end of the year to file and pay taxes may lead to other financial issues if you actually fail to reserve enough funds to satisfy your tax debts. The second myth is that missing an estimated quarterly tax payments deadline is fine as long as you pay on the next deadline. That's totally false also. If you have to make estimated tax payments, following the schedule is really important. So missing quarterly deadlines, even by one day, can mean accruing penalties and interest. If you miss a payment deadline, your best bet is to send your payment as soon as you can. You can also appeal IRS penalties. The IRS would rather collect tax payments than collect penalty payments, so penalties you incur might be forgiven if you actually do the right thing. So the third myth when it comes to LLC quarterly taxes is that you don't need to report tip income. This is totally false because tips are taxable just like wages. They can include cash left by customers, amounts from debit or credit card purchases, and pooled tips distributed by your employer or shared with other employees. So however you actually receive your tip income, you need to report them to your employer if they exceed $20 per month. You can keep a daily record of tips with Form 4070. So receiving tip income can cause you to owe more tax than it's accounted for on your W-2, requiring the need to make estimated tax payments. Another myth I need to debunk is that your taxes are the same whether you are employed by someone else or self-employed. Those are totally different. And another myth is that people are thinking you don't owe taxes on side hustles, especially if you have an LLC on the side. This is totally another myth. You don't need to pay taxes if your clients don't provide you with a 1099. It's another myth that you need to really forget about. If you have income reported on Form 1099 NEC, the IRS may not have received a copy, and therefore you don't need to pay tax on it. And if you overpay your estimated taxes, you forfeit this money. This is not true at all. And so it's really important to understand that, at the end of the day, the way you actually determine estimated amounts depends upon your situation. Let me close to this conversation by giving you a few pro tips, okay? And when we talk about LLC quarterly taxes, especially when it comes to the mistakes you need to really avoid when filing your taxes, it's important to pay attention to something called safe harbor rule. So the safe harbor rule is kind of cool. It really can help you avoid underpayment penalties when filing or even preparing for your LLC quarterly taxes. So the term safe harbor means that through law, you are protected from a penalty when conditions are met. So while the term applies to many areas of law, a major application of it is in taxation, okay? Safe harbor can be applied to estimated taxes, giving you some leeway in how much you need to pay. And if certain conditions are met, your penalty is waived or reduced. So when we talk about safe harbor here, in terms of LLC quarterly taxes, you need to understand that basically, as long as you pay at least 90% of the tax you owe for the current year, or 100% of the tax you owed and for the previous tax year, or you owe less than $1,000 in tax after subtracting withholdings and credits, you are good to go. Not a problem, okay? Now, this rule, though, is altered slightly for high-income taxpayers. So if the adjusted gross income, the AGI, on your previous year's return is over $150,000 or over $75,000 if you're married filing separately, you must pay the lower of 90% of the tax shown on the current year's return or 110% of the tax shown on the return for the previous year. So your state will also have estimated tax payments rules that may differ from the federal different rules. What I want to say here is that if you need to really understand if you want to really reduce or avoid the underpayment penalty, you want to think about annualized income installment method. You can think about like how you're able to have a penalty waiver. Okay, this is totally possible. If you attach Form 2210, you are able to waive the penalty, not a problem. And it's one of those things where the IRS understands when we have an LLC and we're thinking about LLC quarterly taxes, there are circumstances that can actually call for a waiver, not a problem. For example, if you have a casualty, a disaster, or other unusual circumstance that would be unfair to actually impose the penalty, the IRS will look at it and not a problem. They will work with you, and this is kind of cool. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about LLC quarterly taxes. So I gave you the overview, the bonus. I also give you a few pro tips. And finally, I'm giving you the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.